Hi, today we are going to talk about elections and markets. We are at a very critical phase where everybody is still a bit unsure about what would be the kind of government we'll have after the election. Typically, this phase of uncertainty sees a lot of asymmetry. Different people act in different ways to the same situation. Some people show extraordinary courage by betting on the outcome. The majority is unsure and gripped by fear. And depending upon how much this fear is, we tend to undertake investment actions, which may not be smart. What kind of a mindset are we entering into this election phase? Firstly, the FIs had sold long before this phase. They seem to be coming back with a fresh mind. They are coming and taking a fresh look at our markets, making fresh choices, and betting on a certain kind of a stable electoral outcome. Now contrast this with what the domestic investors, which is all of us, what are we doing? We have been invested mostly. We are carrying the investment approach that worked very well up to 2017. And we still think there is a lot of steam left in that approach, in the kind of stocks we ideated then. Therefore, our portfolios still reflect a conviction of 2017 and early 2018. This is largely the case. Many of us believe that the kind of ideation that worked in 2017-18 would continue to work for very long periods of time, which means that we have taken these themes and the ideas that are part of these themes to be compounders that we can own for a very long period of time. Essentially, we seem to underscore the importance of cyclicality in investment behavior. And that is exactly what elections bring about in markets. When you have a new set of investors who control the liquidity narrative, because they are going to provide much of the flows, they will ensure that the flows go to an area which is chosen from fresh thinking. They're not going to go and see what we have been thinking in the past. And we are not looking at what they are thinking now. And this is where the asymmetry is going to increase. You will see that as the electoral fortunes become clearer and clearer, the game would shift towards what those bringing in the fresh liquidity think is the place to bet. So domestic investors would start becoming followers. This is never easy because we are still expecting that when the overall market rises, our teams and stocks would also get their due. But that is not how concentration of flows, concentration of investment opinion, and consensus work. When flows move in a certain direction, the sell side consensus will quickly align with them, which means that what we thought would become the favorites again will probably not attract their attention for a long time to come. And whatever stocks attract their attention will shift very fast. They'll gain valuation very quickly. And the entire market will then adapt to that line of thinking. It is that phase that we seem to be entering into, which means that we should also try and take a fresh look, try and think ahead of what the larger investors who provide market flows would think and try to preempt them in some formats. This is never easy because you will see a very sharp change in investment outlook, and it's never easy to adapt very quickly to that change. This is essentially what has been my focus during these 3-4 months, and more or less things seem to be going along the lines that I had anticipated. And from what it looks like, we are going to see a new leadership, a new emphasis, and fresh teams dominating our investment universe. Let's get ready and be there to play those teams. Thank you.